Hey guys, it's Doc's Market Minute for Monday, December 14th. I'm not really going to be talking about charts that much this week because we're in one of those situations where price can literally do anything between now and the end of this week. Why? Well, we've got another one of these FOMC meetings, and they have been threatening for some time now to raise rates, and I think it's going to happen this time. The problem, though, is that they're trying to form this political narrative behind what they're doing, but ultimately some of the financial narrative doesn't really match that. Looking at the USO, right now we've been in a huge deflationary spiral for the better part of over a year now, year and a half or so. And so does it really make sense to start hiking rates again? Is the economy really that strong right now with the rest of the world kind of in turmoil? And especially with the energy sector and absolutely getting hammered due to oversupply and foreign competition. Again, like I said, deflationary spiral. And we've got the Fed that wants to raise rates. And it seems like they want to raise rates because they boxed themselves into the corner and said, yep, we're really going to do it this time. So they're more interested in pleasing the stock market and formulating certainty, in which they've done a horrible job at this for the entire year of 2015. So here we go. The Fed Watch is basically just about assuring us with an 83% probability of a rate hike this Wednesday at 2 o'clock Eastern time. And then, of course, 30 minutes later, Chairman Yellen will come out and try to explain what she has just done. And what's going to be important is not necessarily this quarter point or 50 basis point rate hike, but really the trajectory of the rate hikes going forward from here. If they come out with a very hawkish or aggressive stance to say, you know what, we've really got to get these rates back up again, you're going to see currency markets explode around the world. And again, if they're too hawkish about this, I think you'll see the S&P drop a full 100 points or so by the end of this week. I mean, it literally could be that severe of a punishing if there's that much uncertainty. The thing the Fed has been doing a bad job of this year is giving certainty to the market. That's one thing that Bernanke and before him Alan Greenspan actually did a pretty good job with, was adding certainty to the market, letting people know what they were going to do and that they were in charge. And what we've seen in 2015 so far is that you've seen a very transparent Fed basically say, well, we don't know what to do. We're going to be data dependent. And then the data started to match their earlier narrative to say, okay, well, we're going to slide the target around a little bit because the data that we're looking at doesn't really matter that much anymore. A good example of that was unemployment. Well, if labor participation is way down, then unemployment doesn't really matter. So the fact that they were looking at a specific target for something, again, did not matter. And the game has changed. So what we're going to be looking for is what happens this Wednesday, not only to any potential rate hike, and at this point, it's the way they've been jawboning the market lately, the Fed heads has almost guaranteed that it's going to happen. But it's going to be how they surround it, how they couch it in the language. And this is why it's really going to be useless looking at charts this week. The market is going to discount what happens next, and it will do so in very rapid fashion between now and the end of this week. Hang on, guys.